Welcome to You and Your Money. I'm Jim Zahansky, Principal Managing Partner and Chief Strategist at WHZ Strategic Wealth Advisors. Let's dive in to today's episode.
Well, I know we were joking when I said there were no tariffs going through the baker's dozen drive-through lines, because, Trevor and Ken are not putting that tax imposed on each of us right now. And now I'll get to that in a minute because, local businesses could also be affected by these potential tariffs if they're importing goods. Coffee beans may be imported, right? Sure. So essentially a tariff is a tax that's imposed on imported goods. So when a product comes in from, another country, and it crosses the border, at that point, the importing company typically pays a tax on that good. Yeah. And then at that point, the current administration is using that revenue they're creating in essence, as a tool to address, what they see as unfair trade practices, hopefully keep jobs and bring manufacturing back to the U.S.
Of course, we're glued to the news because it's almost daily. There's new information coming out. So regarding tariff announcements that we've heard, that we've seen, walk us through some of the most significant ones, the ones that are really getting your attention.
I think the ones that and there might be progress on this front too, but I mean, clearly the trade war with China is one that's interesting, and it's probably the most strategic one that the current presidency is looking at. Chinese goods received back, I think it was in March, an additional 25% tariff on about $50 billion worth of Chinese imports. This is heavily on like technology and manufacturing, right? These are the things we want back in the U.S., and so we're making them more expensive, potentially for China to import them to the U.S. It's not as if, and I would say this to the listeners, the tariff game is, if it stays as is, I mean, I think it's being used as a negotiating tool, but in the end, it could, bring manufacturing and technology jobs back, but it doesn't happen tomorrow.
Right.
This is something that's sort of a long game. So China's seeing the bulk of tariffs. I mean, clearly there's been talk between Canada and Mexico, and I think those are the other ones that we're sort of watching too, because there's been a lot of free trade against in North America, and this affects various supply chains that a lot of U.S. manufacturers use, including car companies.
Yeah, so let's keep going with that side. How are these tariffs and what we've experienced so far affecting, the average American consumer and businesses also?
We'll go back to our drive-through analogy, right? Yeah. So I assume that, the Cardinals are now importing beans, coffee beans. They're having them ground. Their, company that's doing it is importing. Say they're importing them and the tariff is 25% more, right? So they have a choice. I think in the short term, a lot of business owners don't know, and this brings to the uncertainty point I made about markets. Business owners can either pass that tariff cost along to you and I, so the cost of, in my example, cost of coffee goes up, which I have not seen at Baker's Dozen. Yeah. They could eat the profit margin loss, right? They could take that 25% and say, you know what, I'm not going to pass it along. I'm going to eat it until we figure this out. Yeah. And then obviously the third choice is to do a mix of that, right? Pass a little bit on and eat a little bit of the margin. Yeah. And I think that a lot of business owners, and it depends what you're at, I was just sort of using a local example, but clearly, on a bigger example, things like technology, sure, they're getting the biggest tariffs. Manufacturing, all the way down to like you think about like all the goods being imported and made, even if they're certain parts of a good could be increasing prices for what you're paying for. And so, this is not a short-term analysis. So you have to sort of think about how long it's going to take for that to happen. We're not there yet. We're early days of this. And I think that's the thing to keep watching is the things you're buying, are they going to have long-term implications on the prices you're paying? And then how do you afford that? And I think that's the risk to the markets, right? Aside from, so you and I have potentially less money to spend to buy these goods and services.
So I know it's long-term, especially for, more manufacturing. It doesn't happen overnight, but are you seeing any early signs of tariffs achieving their intended purpose of boosting manufacturing in America? Are you seeing any signs?
Well, there's commitments, right? I mean, we've seen commitments from big companies, to, whether it's Apple or Oracle, to build these sort of tech centers, these AI centers. So there's definitely monetary commitments, and at the same pace, though, I think there's as I was saying, because it's early days, Gary, there's some concern from businesses of whether they're not sure where this is going to go.
Yeah.
So to make a commitment, a big commitment to manufacturing in the U.S., you're seeing some early signs, but it's still early days for that to be a long-term play.
So obviously China is the first country you think about. Of course, you mentioned Mexico and Canada, but other countries, how are they responding to our increases?
Right. You've probably read the term reciprocal tariff
Yeah.
or heard the term reciprocal tariffs. And, there's been in the news that a lot of countries are negotiating. We have this sort of 90-day pause in certain things. There's a number of countries negotiating. We remain optimistic that we could have better overall trade terms. And on the other side of it, China's playing some hardball.
Yeah.
Although I do see yesterday, I think that China and the U.S. will have the first trade talks of the year. So that's positive, right?
Yeah.
Maybe in the end, we end up getting and keeping a little bit more tariff revenue. Maybe the 10% one stays and, we reduce some of the others, but we'll have to see. In the end, I'm imagining the administration would love to say, hey, we've increased revenue from tariffs. We've changed the trade deficit with China and equalized it a little bit more so that more goods are coming in the U.S. But we have more work to do to achieve that. And in the meantime, what it's causing in the markets is uncertainty related to that, which at the level that you and I are, the individual investor or the business owner, that uncertainty could have us be pausing on making purchases that we might have made. And that's what we're worried about on the market side.
Well, we've come full circle to investment, our portfolios. That's what you do. It's what you concentrate on at WHC Strategic Wealth Advisors. How should we be thinking about our portfolios in light of all the tariff issues?
Yeah, I mean, everyone, your listeners have some sort of retirement IRA, 401k, something like that. I mean, how have you looked at it this year? Our work in our portfolios that we're managing has led to broader diversification because there is uncertainty, right? I mean, so what does that mean? It means exposure to international markets. It means exposure in U.S. markets, exposure across different segments of the market, like large cap, mid cap, and small cap. So we've changed our allocation strategically to take advantage of opportunities that we have seen. And it also makes you has more potential for you to see some of that upside when markets react to changes. As we look forward, I think the things that we don't know is, when the tariff uncertainty ends, what will be that new tariff policy? Is it positive to the U.S.? It seems like this administration wants it to be. And if so, how do the markets take that in so that you and I can continue to have enough money and jobs to spend and allow stocks to perform in a free enterprise marketplace?
So what's your advice to nervous investors right now? What do you recommend?
Have enough liquidity on the side. So make sure you get enough. I mean, for the average investor, can you pay your bills every month and still save in your 401k? If you can do that, still do it.
Yep.
Right? You have to continue to save because the dollar cost averaging strategy gets into the markets at lower points and different points. So that is really helpful. So still do that and don't be emotional about it. As long as you have enough cash on the side to sort of handle your bills, keep investing in your retirement accounts. And if you're more liquid than that, in essence, we have a lot of clients adding money, right? It's the old adage that you're buying low and hopefully selling high.
Yeah.
And so, that sort of depends on where you're at in your own life. But certainly if you're having enough money to keep saving in your retirement accounts, do it. Don't react to just going into cash. Take advantage of a diversified approach that is long-term. And every person has different goals and they have to, get advice from that on their portfolio strategy related to their own goals.
All indices are unmanaged and investors cannot actually invest directly into an index. Unlike investments, indices do not incur management fees, charges, or expenses. Past performance does not guarantee future results. These materials are general in nature and do not address your specific situation. For your specific investment needs, please discuss your individual circumstances with your financial advisor. For more information regarding wealth management and customized financial planning with WHZ Strategic Wealth Advisors, please visit WHZwealth.com. WHZ Strategic Wealth Advisors offer securities and advisory services through Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor. Fixed insurance products and services offered through CES Insurance Agency. They practice at 697 Pomfret Street, Pomfret Center, Connecticut 06259, and 392A Marrow Road, Tolland, Connecticut 06084. They can be reached at 860-928-2341. WHZ Strategic Wealth. Advisors do not provide legal or tax advice. The tenured financial services team strives to support clients in achieving their financial life goals while providing absolute confidence and unwavering partnership for life.